Hello again and welcome back for another edition of London Direct. The oil price has been creeping up stealthily recently, and there's been some interesting events surrounding Iran and Syria. I've been getting the latest analysis from Robert Montefusco from Sucden Financial. There's lots going on in terms of the oil market at the moment. There's lots of separate stories. Let's start with Iran. There's nuclear talks going on. How significant are those talks, and how significant is Iran in terms of the oil picture? Very significant right now, particularly with Netanyahu over there in New York, talking to the Senate over there, Washington, should I say. Anyway, yes, nuclear talks with Iran, all going well, changes the situation completely over there. They're already talking about increasing the production by another 2 million barrels per day. But, you know, we're not quite there, and the talks are a long way to go, but all going well. And obviously we've got to look at why we have got sanctions in the first place with the your nuclear capabilities over there, if they have or if they're not. That's still going to be checked quite significantly first. But yeah, good talks means keeping the price down in the oil markets, and an actual increase in production from Iran will have major effects on the oil markets. Yeah, it's an interesting scenario, because you're right, Iran could introduce a lot more barrels onto the market, but Iran just can't flip a switch, can it, and suddenly they appear. It's not going to be an instant over. No, it won't be overnight, but they've got the capabilities and they've got the reserves, so it's quite possible. Yeah. But a long way ahead, and like you say, it's not going to be overnight. We could be talking a year, 2 years, 3 years, 4 years. But it has the capability, but a long way to go in these negotiations before we ever get anywhere near that. Yeah, Libya is something else which has been rumbling on for a long time. We've not really had a proper government there since Gaddafi fell, if you could call that a proper government. Yeah. but in terms of what's happening at the moment, there seems to be some oil fields falling into we don't know whose hands. Is that important as well? Well, it's a government set up in a different province over there. Any attacks on oil fields that's going to cut production will again influence market prices again. And at the moment, that is actually giving a bit of a bid to the oil market, pretty much more than the Iran story, because that's a time issue, and this is happening right now. And obviously we've got to look at what's happening with IS as well, because any friction over there and any attacks on any oil fields is certainly going to move the oil price. It's been about a month, 6 weeks since we last spoke. We've seen the oil price creep up in that time. What's the reason for that? Is it a change from OPEC? Is we seeing demand get better, or is it just speculation? No change from OPEC at the moment, because the Saudi oil minister has actually been speaking today. But what they're seeing is extra demand. They're seeing demand coming from China again, demand coming from India. A lot of it going into strategic oil tanks. But that is that demand as the prices have come low. But OPEC not changing the stance, certainly not the Saudis. In fact, with that extra demand they're seeing, they've actually cut the discounts to their Asian clients. So they are seeing steady growth there. No one's talking about reductions in production at the moment. Yeah. So what about the China story? We saw the PBOC cut rates earlier this week in a move to try and stimulate their economy. You were telling me off camera that you do a lot of business with China. So what's the situation with China in terms of that oil demand? Well, like I said, the rate cuts, it is because there's a lot of demand because it's cheap and they're filling tanks up like that right now. But also the Communist Party is having its annual talks at the moment, and they're looking maybe to stimulate the economy a little bit more. We may see some more policy change, well, not policy changes, but some more directives to stimulate the economy. So going forward, that might be a clue to say that we might get the more demand coming from that region. We're about $60 a barrel at the moment for Brent. Last time we spoke, you're saying that you can only really see bearish pressure for the oil price. Do you think this $60 market is going to be undermined? Well, I think it's probably a fair price right now, because what we're seeing, we're seeing two different price rises. We've seen the Brent go from 50 to 60. But we've seen the WTI price stay relatively cheap at under or around 50. And that's basically because we've got a lot of US production, a lot of oil going into storage,
whereas the Brent is reacting to what's happening in the Middle East. So still a lot of overproduction, or a lot of production coming out of the US, a lot of production globally, OPEC not cutting production, but as economies improve there will be demand, but still a hell of a lot of supply at the moment for us to see a lot higher prices, but $60, $70, yeah, possibly.
Well, thank you to Robert for his analysis. Stay tuned to Duke's Copy TV for much more of the same, but for the moment, from London, goodbye.